Hi, Jay.
Hi,
Uh,
Ramya.
let's continue our series of the bullish strategies and let's look into the call debit spreads.
Sure, Ramya. The Pongal special bullish strategies. Yes. And do you have any ticker symbol in mind?
I think we took Intel last time, so let's do the same one.
Okay.
It's a smaller ticker symbol and easier for most people to enter into.
A call debit spread is a buy call, which is it has kind of a limited risk because instead of buying 100 shares of Intel, you're playing it with the option. So a buy call, but that is like going straight with just one leg option. Instead, let's say if you are okay to cap your upside profit potential and possibly add a sell call to the buy call, which technically provides a protection for you on the downside, then that becomes a call debit spread. So in Intel case, if you need to add um, one contract and then how far you are willing to go,
How
typically
about for next Pongal?
that's smart. I would say that's smart. The reason being, when you're entering a bullish strategy with a call debit spread, going a little far out um, makes it a better choice. The reason being, I mean, you won't lose a lot of theta decay. I mean, if people are familiar with the Greeks within options, you are kind of protecting because there will be 3 or 4 different earning seasons for Intel if you go up to next Pongal. So the strike probably I will choose. I mean, do you have anything in mind? I would, because if you go at the money, the delta is close to 50 or 40 kind of a thing. If you go a little lower than the current price, then your delta is a little high for the buy call option.
Okay.
So 40 looks good for you?
Yeah, so a little bit in the money, I guess.
Yes.
And so that has a cost of.
Yes. See, as you can see here, if you have to buy 100 shares of Intel today, you will have to shell out 4696 into 100, which is 4696.
Right.
Whereas to play the upside potential, and if you're bullish on Intel, you can just enter a buy call at this particular strike and then pay $1,452 or 1,475. That's what it is taken as the evaluation price. And if you feel like you want to have a downside protection, especially going into earnings, it is good to actually add uh, a higher strike sell call. And I'm choosing the same expiration and making it a vertical call debit spread,
Mhm.
uh, which we I think mentioned in one of the earlier videos as well. So how far you're okay? I mean, do you think that Intel will hit 70, 60, anything in mind?
Let's go with 70.
Okay, yeah, that's a good one. Because as you can see, uh, I mean, if Intel goes up to 70, you will book the maximum profit. If it goes just above 70, you're capping your profit at 70, at
Right.
$70. Right? So that's what this means. So this entry basically is a buy call at a lower strike and a sell call at a higher strike for the same expiry date, which we have chosen January 2027, the next Pongal, as our expiration. So if you apply this and then if you see this together, this is the bullish strategy on this particular one. And as you
Mhm.
can see, this has a very good risk reward potential. You are at the most risking $935 because
Right.
you paid 1,475 for your buy call and have received 540 for your sell call.
Right.
But if Intel goes up based on your bullish outlook, this is going to actually I mean we already have a um, price mentioned here for June. So let's say if Intel goes to 50 by June 2026, put together you can make $129 profit.
Right.
And for whatever you paid, I mean you paid only 935, which is a decent returns, if I would
Yeah.
say. Let's say if Intel goes to 55 by the same date, then you are making almost $356, close to
Mhm.
30%. Let's say if Intel goes to 60 by, even we can even go a little far out and then
Further
say
down.
July 24th, you're making 615. As you can see, I mean, this is a bullish outlook on Intel, and the max you can make is $2,065 on this.
Right.
Assuming that, let's say, if it goes to 80, you will still make only $2,065, not beyond that.
Right.
So that is the capping of the upside potential. But this is a completely bullish outlook on Intel, and you are entering a buy call and a sell call to protect your downside. So that's what this is.
Vertical. So
Vertical
thanks,
candle.
Jay. So that explains the vertical call debit spread as a bullish strategy. And we'll be back again with the third one in our series in a short while.